Good afternoon, everybody. Guess who took the day off from work? Whoa, Maddie, thank you very much for the gifted memberships. You know, this guy's amazing. And the reason I'm not checking in with him right now is because I know that he did not take the day off and he's at work. Maddie, thank you very much. Really appreciate it. Before we get started, please take a read. Please pause the video. I am not a financial advisor. I am not your financial advisor. I just do a ridiculous amount of research, and this is for entertainment and educational purposes only. Please do your own due diligence. All right, we're going to get started. This is going to be a fiery midday episode. I said I was going to come out of the gate hot if this happened today, and I'm going to come out of the gate hot most likely. We'll see how hot it gets. That's why I got the window open. Freaking Oracle. So Oracle is down. Oracle's selling off. It's at 194.48. It is down almost 13% right now. So we knew that this was a chance. We knew that the bears would get a hold of it if they had the chance. So they're trying to make it seem like a bomb was just detonated against the AI sentiment. Oracle beat on EPS. I went over everything last night. I'm not going to bore everybody with all the ins and outs of the details, okay? But I did say that this was going to have a problem. Now, this is making a huge impact on the NASDAQ and market-weighted ETFs because of how big of a company Oracle is. So the big points from last night, we're just going to go over the big, broad strokes, and then we're going to get into the actual numbers and why I think that this is going to continue to go down, but I don't think it means a thing for AI. We are not in a bubble, and the fact that Nvidia is selling off is insane. So what did Oracle deliver last night? $16.1 billion in revenue, up 14% year over year. Cloud, infrastructure, and software, IaaS, and SaaS, SaaS. Infrastructure as a service, software as a service. $8 billion, up 34% year over year. Why is that significant? It's significant because from the total revenue mix, cloud-based services was 50% of the revenue, up 34%, whereas their on-prem and licensing software was down 3% year over year, $5.88 billion. We know is the future. Oracle is playing catch up right now. And the big number coming out of this was the remaining performance obligations came in at $523 billion, which was up 4.38% year over year. That's a big number. Remember, $523 billion in RPO indicates there is strong demand. There is a tremendous amount of need for this infrastructure. And right now, we're in a situation where the bears are gaining control of the narrative. Again, Nick's Hobby, thank you so much. Thank you. I really appreciate it. AV3761, I truly appreciate the support. I appreciate everybody being here for the rant. It's about to get fiery, okay? It's about to get really fiery. So here's the interesting stats about the backlog. The RPO is up $68 billion sequentially and 438% year over year. Look, this reflects the huge need for multi-year cloud commitments. It just does. In the earnings call and in the press release, Oracle announced that there are new commitments from Meta and both Nvidia, and they are major contributors to the RPO growth. This is a multi-cloud. They are running in 211 regions, and they are halfway through building 72 multi-cloud data centers. 72. Now, when I say all roads lead back to Nvidia, I truly mean that all roads lead back to Nvidia, because on the earnings transcript, they specifically said that cloud infrastructure revenue, which was 4.1 billion, their GPU related revenue was up 177%. That is huge. Now, their large data center in Texas, they're expecting will have 96,000 NVIDIA Grace Blackwell GB200 units. They're also taking possession of the AMD MI355s. Oracle's not playing around at all. Oracle is not playing around. But I think it's overvalued. And here's why. And let's go into why this is not a bubble. We're going to do both at the same time. Why this is not a bubble and why I think shares of Oracle can keep declining. So here are the actual numbers. So I prepared everything last night and I updated everything today because I wanted to see where everything was actually structured. Spreadsheet. I mean, this is why people are freaking out. This is what's giving the bears ammo. And I said that the bears were going to have ammo on this if Oracle came out with their CapEx and free cash flow going in the wrong direction. So actually, we're going to go to their investor relations page. We're going to bring up the deck from Oracle very quickly, just their spreadsheet that they came out with, because I want everybody to be very aware of what Oracle did, why we're in this position, and then we'll get into the actual numbers against all the other hyperscalers. Let's see. All right. For those of you who did not look yet, these are their tables. Operating cash flow in Q2 2025, because keep in mind, Oracle does not report on a calendar year. Their fiscal year is like Microsoft's. So they just finished Q2. So 20.29 billion in Q2, and it increased roughly $2 billion year over year. Now, for any other company or most other companies, that would be amazing. The problem is that number in the negative right below it is your CapEx. So your CapEx has expanded from 10.75 to 35.4 billion. They went from producing $9.5 billion in free cash flow to negative 13 billion. So now you have the bears coming out and saying, look at this. This is being funded by debt. There is an AI bubble. The bubble is going to pop. What happens when too much air goes into a bubble? It bursts. Well, technically speaking, they would be correct. The problem for the bears is not all bubbles are the same, and a bubble can keep expanding and expanding and expanding. And sometimes bubbles aren't even over expensive. Now, here's the problem with the bear thesis. And it looks like everybody who likes to comment on my big 2,000-word X posts are going to get what they want this weekend. I will be putting together a very large X post going after the bear thesis. Once again, it'll be number 3 in that series. And here's the big reason. Oracle has 19.76 billion in cash on hand. $0 in long-term investments, and their long-term debt just went to 99.98 billion. Net liquidity of negative 80 billion. That is significantly different than the other companies that they're competing against. Significantly different. This is a tale of two cities, if I've ever seen one. Alphabet, Microsoft, Amazon, and Meta can write a check and get rid of all their debt in one foul swoop. They don't even need to go into the long-term investments. They can do it with cash on hand. Oracle is so leveraged right now. And guess what? Negative free cash flow compared to everybody else. And keep in mind, look how much CapEx they're spending. And they're all positive free cash flow. So the market's not wrong to be selling down Oracle right here by any means. I mean, if we look at this, Oracle is significantly down on the day. On the week, it popped a little bit. I thought this was on week. I guess it's not. I guess it's year to date. It's still up. But we look at the 1 hour chart. It is rebounding a little bit. And I said that it could get bought up how low it goes. I don't think we're getting anywhere close back to where we were yesterday before earnings. And I do think that the bears can take this down to 150 or so. There's a lot of momentum to the downside. We got to see how much buying happens here. But the narrative is not great for Oracle, but that does not mean that it needs to be bad for everybody else. And I think that's where I'm getting a little annoyed, because when I'm seeing Nvidia, where is Nvidia right now? They were down on the day. 179. I mean, the fact that Nvidia is down is crazy. It's absolutely insane. It doesn't make any sense. So we got a couple of different takes on CNBC. I haven't watched anything. I've actually been working a little bit this morning, even though I took the day off. So let's see what some of these people say. I'm going to react to it, but I think that this is ridiculous. I think that we're getting a really big opportunity in Nvidia, because guess what? Earnings season is now 5 weeks away. Tesla will kick it off like they always do, and then we get the rest of the hyperscalers, and then we'll get Nvidia mid-February. And what did Jensen say? 65 billion revenue, another 60% year-over-year quarter. This is a company that is doing more than $2 billion a week in pure profit. And the market wants to take it down because Oracle is tapping the debt markets. I mean, let's be serious. Oracle's not going anywhere. I mean, if anybody's worried about Oracle going under, I think that that's the wrong take. I don't think that they're going to go under. I just think that they're going to be dead money for a couple of years at this point, because there was a Citi analyst coming out and saying that they're expected to tap the debt markets in the tune of 20 to 30 billion a year over the next 3 years. So this could be an AT&T or Verizon story for a little bit. There's a lot of debt on the sheet. So let's see. There's 2 or 3 videos. Give me 1 sec. So let's go with this one. Oracle is a cockroach company that will still be here in 10 or 20 years, which is basically playing off what I was just saying. I have not seen any of these. So let's see what they have to say.
We're hearing one of the co-CEOs say they're going to need to borrow less money than previously thought. At the same time, they're raising their CapEx. Why do you think the street's reacting to that so strongly? Is it the spending, or is this like the lack of clarity about the financing?
I think that there is just a lot of concern here about where that revenue is supposed to come from. I don't think that there's a lot of certainty that OpenAI can do what they say they're going to do over the next few years. And I think that that's mostly what we're seeing reflected here. When you start hearing words like credit default swap thrown around, you get that 2008 flashback, and it's like you're back in Nam. And so I think that there's just a little bit of a sense of maybe this isn't the sort of miracle stock we thought it was.
All right. So it might not be the miracle stock we thought it was. We saw RPO surge, and it's not just OpenAI now. They said Meta, Nvidia, also key customers, key clients for them. Shouldn't that ease some of the concerns about overconcentration with OpenAI and the fact that OpenAI has to come up with all this money, because we know that Nvidia and Meta do have the money?
They certainly do have the money. The question is, will they actually have enough usage to need all of this? And I don't know what the Oracle contract looks like, but we do know that a lot of these deals that are being announced, they're not sort of set in stone. And so if the usage goes down, they have the ability that these customers have the leverage to pull back and say, hey, actually, we'll push it out a quarter, we'll push it out a year. We're not quite there yet. So I think that is causing some concern. I also think that there was so much excitement when Oracle started these announcements that they got a little ahead of their skis on the stock price. And now that's just coming down to earth a bit.
All right. Chip neutrality. I thought that was a very interesting comment from Larry.
I agree with everything she's saying. Oracle got ahead of itself. They're going to be fine, but they're not in the same financial position as the other hyperscalers. And do they deserve to be down today? Absolutely. Do they deserve to drag everything else down with it? No, because what is happening with Oracle means nothing for Alphabet, Meta, Nvidia. Doesn't mean a thing.
Larry Ellison, the idea that they're not married to Nvidia, they're certainly going to work with Nvidia, and we saw Nvidia and CoreWeave move lower, I think, on those comments. But shouldn't that be exciting for the entire AI trade, the fact that we're starting to see a broadening out when it comes to chips, and the idea that we're going to see maybe not replacements for Nvidia chips, but other alternatives?
Yeah, I think that is. And we've known that's coming, right? I've been saying that for quite a while now, that NVIDIA head start, but it won't be sort of the only game in town forever. I think, about 6 months, a year ago, I started saying, look, you have maybe a 2-year head start. And so now we're starting to get to the end of that with NVIDIA. I think that is good for the ecosystem, maybe tough for NVIDIA, but I think that that's good. And I think that for people sort of in the know who've been watching, it's not surprising.
All right, bottom line question for you, Sarah. We had a guest on yesterday, said this was a viable dip into Oracle going into the earnings report. Obviously, it's dipped even more now. In your mind, is this a viable dip? Is this a company that you have confidence in as being one of the winners in the AI trade, at least over the next year or so?
Do I think that Oracle is absolutely a cockroach company that will still be here in 10, 20 years? Yes. Do I think that this dip is quite dippy enough? Maybe not yet.
It's almost like she called me last night and asked me what she should say, because I agree 100%. I think this goes down further, and it will get interesting at some point. But at 193, 194, it is not interesting right now. I'm sorry. Oracle does not have the balance sheet. It does not have the cash flow. Certainly doesn't have the profitability of the other hyperscalers. Now, this is great for Nvidia because it just means that they're going to have more. How are we going to put this? We're going to put this as, this is super bullish Nvidia because it is going to make sure that their cloud GPUs continue to be sold out for a while with the amount of data centers that Oracle is bringing online with everybody else. If anything, this helps the AI bull case because it shows you how much capital is getting deployed. And Oracle is not some run-of-the-mill company. It's not a company that isn't going to be able to survive this debt load. They'll be able to figure it out. You don't bet against Larry Ellison and his team. At the same time, that does not mean that there is value to be unlocked here. So I got to tell you, I agree with everything she said. It's rare that I will agree with everything somebody says on CNBC. So there's another one. I mean, this is actually pretty funny. Citi lowered Oracle's price target to 370. Like 370? That's insanity. That's insanity. I don't, that my brain can't even comprehend throwing a 370 price target on it. I mean, Oracle is right now, was it 550 billion or so? And there's all different components of it. I mean, they're only trading at around 31 times this year's earnings. So if you go from an earnings perspective, it may not look that expensive because they're expected to get down to 20 times over the next 2 years, 2.5 years at this point, because we're halfway through their current fiscal year. But you look at the other financial statements, you look at the balance sheet and the cash flow statement, this is not the same high quality as other hyperscalers. And I do think that the street is going to get a hold of that. So, and Chills, thank you very much for the comment before. I think she's 100% correct. Look, I don't want OpenAI to go public. I think I'm probably the only person that does not want OpenAI to go public, because when they do, I think that when we get a glimpse into their financial statements, I think it's going to be a big problem for AI, because there is a very good chance it is not going to look the way people are hoping it's going to look. Now, I have no insights to what those statements look like, but everything that we've seen, everything that Altman said in that interview with Gershner and Nadella, I would be very worried to see the actual financial statements with a valuation of anywhere from 500 billion to $1 trillion. I just think that that's going to be insane. And look, I'm not ignoring the word you guys are spamming. I'm sure Amit told you to spam it because it is a statistical term, okay? I'm not shying away from it. Steve is not in the office today because to hang out with all of you and do a few other things I got to get done, because I have to use vacation time before the end of the year, because I took one vacation day, I think, or 2 vacation days from January 1st until November 1st. And I had all this time accrued that I'm going to lose if I don't take it. So I'm trying to take a couple of Tuesdays and Thursdays off from November through December. I'll probably still lose time, but not as much as I would have. So, and yeah, I do see pretty much everything. But when I'm going on a rant, I usually, hold off until I'm done with that rant to say something. I'm not saying it, guys. And all right, the fact that someone said, Steven said, I'm going to think you're a Matt Rife fan, and I can't play the clip, but I'm going to talk to him and see how we can get it on tonight, because it is crazy that one of you guys said that to me. And no, I'm not getting that tattooed to my inner lip. I do think it is crazy that she did that. Anyway, Citi lowering their price target to 370 when it is down to 193. So they're basically saying it's going to double from here. I want to see what their timeline is this is kind of crazy.
This morning, a Citi analyst, Tyler Radke, maintaining a buy today, lowering his target from 375 down to 370. It's good to have you, Tyler.
This is the guy, by the way, who said that he put out a research note saying that Oracle is going to need to do 20 to 30 billion in debt offerings over the next 3 years. So this is the guy whose note that I quoted the other day, or last night and today.
Yeah, thanks for having me.
What'd you make of it? Is it about the sort of ratio of the CapEx move versus the forward booking revenue move, or something else?
Yeah, I think there's a lot of things, but look, I would say, put simply, the debt market is in control of the narrative right now, right? So you saw them, obviously, I think, come in with a very strong bookings quarter, their second strongest bookings quarter they've ever delivered, but you didn't see near-term numbers move up. Now, they did raise next year's revenue by $4 billion. At Analyst Day 2 months ago, they put out some pretty ambitious 2030 targets, over $20 of earnings. So we're focused on where is this company going. There's definitely a little bit of uncertainty, some near-term revision issues in the model, but this is something we're hearing from Microsoft, right? They're continuing to see the capacity constraints that's weighing on near-term growth, but overall growth is accelerating, bookings are accelerating, cloud revenue is growing faster than it was last quarter. We think that continues. Clearly, there is a little bit of uncertainty, though, on the financing side of the equation. I think that's what the market wants to hear.
Right. Is OpenAI sort of a weight around its ankles? And by the way, we're going to talk more about it with Disney. Does that change any of that?
Yeah, I mean, I think that is issue number 1 or 2 from investors. It's the financing thing, and hey, what's going on with OpenAI? Can they pay you $300 billion in their contractual commitments longer term? So obviously, we'll get an update in a little bit here, but
I mean, that's a big number that they're going to have to pay them. That's a really big number.
Our view is, look, AI, this is a massive market opportunity. If it's not OpenAI, it's going to be somebody else. These data centers are fungible. If it's not being sold to OpenAI, they could go around and quickly reconfigure that to somebody else. We think that they can make very good money selling this over $20 of earnings by 2030. So I think in a year from now, this provides a good entry point.
How extreme can the capex, the revenue to capex, the capex to revenue ratio get? Where are we right now?
Yeah.
3/4 or so
Yeah.
of your revenue?
Yeah. And look, I think the reality is the capex is a read on that forward revenue, right? So we're expecting revenue to grow 3-4x from where it is now. But of course, you have to front load those investments, right? Data centers are very capital intensive. I think a good analogy though is you look at the early days of public cloud. What were Amazon with their AWS business doing? They were not free cash flow positive for so many years, right? So this stuff, you have to put in the money early, but it's very fruitful as.
Yeah, the difference is that back in those days when Amazon was not free cash flow positive, there wasn't competitors that were in their space. Walmart did not have an e-commerce business. They weren't building that out really. Some would say that they're barely even a competitor in e-commerce. I mean, I don't agree with that comment at all, because right now Oracle is competing against companies that have tremendous balance sheets and tremendous amounts of cash from operations. I mean, Microsoft and Alphabet are doing more than 140 billion a year in cash flow. So crazy.
As customers ramp up, you start to sell on more profitable services. That's what we think is going on at Oracle.
But in some ways, it's asking a lot of Oracle investors, at least long-term ones, who are very much accustomed to a company that generated a lot of cash flow.
Absolutely. I mean, their free cash flow is negative. They're increasing their leverage. This is a more capital-intensive business, but you're seeing it across big tech, right? Meta's free cash flows come down significantly. Microsoft, they're not, dipping into the red, but 80, $100 billion of capex is a huge number that Microsoft wasn't doing in the past. Oracle, it's more outsized because they are playing catch up, right? They missed the early days of public cloud, but we do think that they have something differentiated here. And so I think this investment makes sense, provided you have that confidence.
So when does the stock?
Now, I did not see this. Sorry, I had to send an email. Listen, when we take a day off, we don't really take a day off. We're still working. I know all of you understand what that's like. This is a little weird because Meta's free cash flow dipping, it's nowhere near negative. Microsoft's capex expanding, they're still doing a tremendous amount of free cash flow. So Oracle's not in the same situation.
Start to reflect your optimism?
I think you need to get an update on the financing, right? Which you should get in the next 1 to 2 quarters. So I think over the 6 to 12 month time frame. Obviously, if OpenAI monthly active user growth starts to reaccelerate, that helps too. That's difficult to predict, but certainly looking forward to hearing what Sam has to say.
But they're likely to maintain investment grade, aren't they?
Yeah, so
isn't that an important point? And they have alternative. I think they talked about this. Exactly. They have alternative financing solutions.
Right, and so they can tolerate another downgrade to BBB negative, I believe, before they kind of get out of that investment grade. They talked to us last night. They said we're very focused on maintaining that investment grade rating. But again, there's other options. Customers could bring their own chips. There's vendor financing. We've seen a lot of these creative financing moves in the industry for sure.
Do you see them coming back to the debt market with some regularity in early 26?
Yeah, I think we're estimating that they need to raise about $60 billion of debt over the next 3 to 4 years.
Next 3 to 4 years.
Yes, and so obviously they took up their capex numbers.
Whoa! We got to hear that again.
With some regularity in early 26?
Yeah, I think we're estimating that they need to raise about $60 billion of debt over the next 3 to 4 years.
Next 3 to 4 years.
Yes, and so obviously they took up their capex numbers, and so between that they have some debt coming up for maturity. They will need to do some raising. Now, could that be a convertible offerings, a mix of equity? That's hard to say, but we do expect them to raise some money here.
And you think it'd be well absorbed? You think?
I think that will provide clarity, right? What markets obviously don't like is uncertainty. So I think the extent you get clarity, and again, you get clarity on the numbers moving in the right direction.
But not just debt.
By the way, you guys are just too smart for me with all these nouns and adverbs and all that stuff. I got to tell you, too smart for me.
It could be equity too, you're saying? right?
It's possible. Look,
Yeah.
I mean, I think they were pretty clear to us. They're not going to do a share issuance, but if you look at some of the signals in the debt market, right, the spreads are growing, right. So if you do some interesting, creative debt-backed
hybrid.
convertible type stuff, right.
But the backlog number, I mean, that was the key number, right?
Absolutely. Grew
$523 billion deal backlog. What does that translate into revenue growth? And when's it going to be enough for the street not to worry about all this?
Right. So I think what's interesting of that backlog number, massive growth, no question. A lot of that is long dated, right? But if you look at the current piece, which is the revenue expected to be recognized over the next 12 months, that accelerated meaningfully. So that grew over 40% this quarter. So I think you are starting to see that backlog flow into revenue. Again, their business is accelerating faster than basically anyone out there. Obviously, the bar is high, expectations are high, but this is, it's a stock trading with a 30 times, if not a little bit less on earnings. So it's not a crazy valuation for something with a huge growth potential.
Right. That is putting the pedal to the metal like they are.
Yeah.
Tyler, thanks. Good one. Appreciate it. Tyler
Thank
Radke
you.
over at Citi.
All right. So let's say this. I'm really happy that we're normalizing not wearing ties anymore. I haven't worn a tie since, unfortunately, going to a very close friend's wake. That was the first time I've worn a tie in potentially 5 years, maybe 6 years. I'm done with ties. I'm glad we're freaking trying to normalize this movement of no ties. It's freaking great. Anyway, 20 to 30 billion a year in debt that they're going to have to issue over the next 3 to 4 years is going to put them in a situation where they're at 160 to 200 billion in debt on the balance sheet if they are not paying any of it down. So show everybody something else with the long-term cash flow statement about why this is also being a big drag on Oracle. All right. So trying to get a little quicker with the transitions, everyone. Apologize. All right. So we're on the cash flow statement. This is where you can find all the dirty little secrets about any company. You just got to know where to look. All right. The big thing, the first big thing, stock-based compensation. I mean, this is large amount of stock-based compensation being issued to the team at Oracle. I got to look more into that. That's a big number. 4.8 billion. Now, we went through the cash from operations and CapEx. We're not going to go through that. What I want to say, and this is what I'm worried about, total debt issued, 28 billion in the trailing 12 months. They've only repaid 7.8 billion. That means their net debt position is likely going up a lot. Now, not great. They're also issuing shares, which is diluting shareholders. And here's the big thing. Go back to 2019 through 2022, call it. That's around 80 to 90 billion dollars worth of buybacks. I mean, in 2019, they did 37 billion in buybacks. Then you got 20 billion, 21 and a half, 17 billion, tremendous amount of buybacks. And then once they started getting into the data center game, they declined significantly. And now we've only done $500 million, 506 million in buybacks over the trailing 12 months. So buybacks are slowing. Debt is getting issued at a pace that is outstripping what they're repaying. So they're not even issuing new debt at lower rates to pay back debt with higher interest rates to expand margins. That worries me. Like, that really freaking worries me. I mean, all negatives across the board with this. I mean, cash flow statement is not bullish. I can tell you that right now. It is not bullish. If we go to the balance sheet and just look at where we are, last column on the right, everyone, you got 19.8 billion in total cash on hand. When we look at their long-term investments, they've moved those to short-term, completely depleted since last quarter. Long-term debt, 99.98 billion. I mean, this is a big number. What's their EBITDA? That's the question. Let's see what the leverage is. So we are at, call it 26. So long-term debt to EBITDA ratio 4-to-1. I mean, that's high, everyone. That's high. That is high. Thank you for calling him by his real name. Sir Joseph Carlson is buying more Netflix. Thank you for the news report. We should do a Sir Joseph Carlson news report every week on what he's buying, because he is just the smartest person there is. Absolutely. I like it. If you guys feed me that information, we'll do it. Maybe we'll even put a running ticker in there of what his portfolio is. Yeah, I got to tell you, Oracle is not interesting to me here. And when we look at where everything is updated, the street is expecting a tremendous amount of growth on their EPS. Okay. They're expecting it to go from 729 to 1094 over the next 2.5 years. And a lot of analysts are looking at this. And I think this is why it's not down further today, because it is trading at a interesting PE for current and forward. And if you look at even out to 2030, which theoretically you can, because there's 8 analysts. I usually like double digits on the number of analysts on the street covering it. That's why I don't look at when it says one person. But if 8 analysts have their consensus $8.79 on EPS for their 2030 fiscal year, that's a really low multiple and a lot of growth over the next 4.5 years. So this is, to me, Oracle is a long-term investment. It's just not optimal here. And revenue, they're really looking at revenue to kick up. I mean, they're expected to do $67 billion this year and go to $127 billion over the next 2.5 years. So what is that, 92% increase, that area? Just like the woman said, this is a cockroach company that's going to stay around, but it's just not interesting at the valuation here. And the way that I would get into this is I'm looking at the fact that I know that Oracle is going to still be a company. If I had a bet on it, I would say they're not going away. Do I think it can go lower? Yes. Do I think it deserves to go lower? Yes. Is it going to? I have no idea. I don't have a crystal ball. But with the debt position that they're in and with the market cap they have, I can see the AI bears coming out to play even more. I think Nvidia is has more potential right now for ROI, which is what I am more interested in. So I would rather, for me, and this is where I have my money, I'm playing Nvidia right now for long term. Now, if Oracle keeps going down and it gets down to 150 area, 170 to 150, around 170, I'd probably start buying, and I'd scale my way in down to 120 to 140 band, because I don't think it goes below 120. It may not even get to 120, but I certainly don't like the valuation here, and I just think that there's better opportunities for me. So that's where I am on this. So I think this is ridiculous that Nvidia is getting taken to the woodshed. I am shocked, and a very long post is going to come out about this, everyone. It's going to happen. I wonder if there's anything else on that's come out about this. Give me one sec. Let's see. There is something I wanted to show everybody, but we're going to save it to the end. Okay. Listen, I think everybody knows by now, I think Stephanie Link is brilliant, and I do not use that word much at all. And she just exited Uber. I know there's a lot of people that like Uber, so let's watch this. She's one of my favorite analysts on CNBC. She's top 3. She's phenomenal. This is going to be interesting because Uber is actually something that I'm kind of interested in.
A trade alert, Stephanie Link joining us now. So this kind of surprised me, although maybe I shouldn't have been, based on what some others are doing lately with Uber. So you sold it, okay? Joe sold it yesterday. Bryn sold it last month.
Whoa. Joe Terranova sold it yesterday. That must mean that the momentum's breaking down because he probably owned it in the Joe T ETF, which is all momentum based.
Tell me why you did that, and then I have ownership here. Or I will fight about it. Go ahead.
Well, first, I was up on the name, so I did take some profits. Long term, I love the story. I love the concept. The total addressable markets are real, and there's a lot of growth out there. But I think short term, the overhang is going to continue to be the competition in robo-taxis. Anytime Waymo opens their mouth like they did yesterday and talked about they're expecting 1 million AV rides per week by the end of 2026, the stock takes a hit. Anytime Tesla talks about the progress that they're making in their AV business, the stock takes a hit. And so I just think that there is this perception that they are way behind and that they're going to have to continue to aggressively spend. And we saw that last quarter when they missed on EBITDA. Initially, I thought EBITDA was the miss was like a 1 quarter thing, but I do believe they have to heavily and aggressively spend to catch up. Well, Scott, I think they will be a winner long term, but I think from a stock point of view, this is going to be an overhang. And so I just think, and I took the money and I put it into Rockwell Automation, and we can talk about that if you like, but I think there's just a lot more upside in a Rockwell Automation for the next, say, 6 to 12 months than there is for Uber.
Let me bring it back on the desk. All right, so you Josh, maintain a position in this stock. Why has this become such a battleground? And I think this program is pretty representative of what's been happening in the marketplace. Steph sells it, Joe sells it, Bryn sells it, you like it, Bill likes it. What's going on here?
The people that are saying Uber has to catch up have it precisely backwards. Uber is the only majorly profitable version of ride hailing in the country, and one of only 2 profitable delivery players right now. And that's not going to change this year. Waymo is not going to make money, and Tesla is definitely not going to make money. The amount of money that those companies are spending in order to catch up to the size of Uber's network is unbelievable. Now, lucky for Waymo, the shareholders don't expect to make money, and it's still privately held. Google is the majority. And of course, Tesla, if they never made money ever again for the next 100 years, nobody would even notice. So they have that.
You got to love Josh Brown. Oh my God. You got to love this guy. If Tesla didn't make money for the next 100 years, nobody would notice. He is so right. You know what? I'm going to do a dedicated episode on just Tesla so everybody can roast me, because I'm back in the camp of this is one of the stupidest valuations that we have in the market.
On their side, the competitors. What Uber has on its side, the size of the network, the size of the ridership, and the fact that ultimately autonomous vehicles will be a commodity. Uber will not have the cost of owning them. Instead, it'll have the most profitable layer, which will be the software layer that connects riders to. So I don't think there's any advantage in Uber going out and trying to compete who has the most cars and own those cars. I think ultimately autonomous vehicles will be owned by private equity firms. They will be a dime a dozen. They'll be everywhere, all over the roads. And what Uber will have is the only profitable network of both autonomous and human-driven vehicles on the road. This is a huge market misunderstanding.
All right, before we hear what the other side of this is, I think that Josh brings up a great point that Uber doesn't matter if it's autonomous or human driving. They're the platform, they're the network. So both are going to live on it, and they're not impacted. Now, are you going to use a Waymo app or a Tesla app over Uber if you're already an Uber subscriber? I have no idea. I think it's an individual preference. And the likelihood is that your information's already in Uber. You already have your rating on it. Your credit card information set up. You're just going to start using it on Uber, is what I would think. And I don't think Uber is going to get hurt from autonomous. I think that the network is huge. And I think that if anything, maybe they'll start buying autonomous vehicles and putting it on the network and cut out some expenses. So we'll see. I think long-term Uber is very interested. Now, where I will push back is I don't think autonomous is ready for major metropolitan cities. So if there's anyone in the chat that lives in New York City, drive through Midtown Manhattan and tell me if you think full self-driving can work. There, in my opinion, today, there is a 0% chance. Now, in the future, I think we'll have it. I think it would be silly to say it's never going to happen, but I think that we're so far off with just all the variables that happen, from people walking out in front of cars to bicyclists. I mean, try driving down Lexington and make a left onto any freaking number street, 46th, 52nd, 60th, doesn't matter. Make a left with all the bicyclists coming. There are so many variables that happen when you're driving that I think we're very far off from very dense metropolitan cities. But, Steve, you sound silly. Drive FSD 14.2. Do it in the city. Drive through the city. I mean, it's just, I don't see it. But that's just me.
Standing.
Josh, they missed on EBITDA last quarter. That's
Oh,
not
no.
profitable. Yes, they did. Yes, they did.
No.
That is
So
why
what?
the stock fell. That's why the stock fell. And excuse me,
Look at Josh being sarcastic. Oh, no. Oh, no. They missed on EBITDA. Oh, no.
that's why the stock hasn't done that well. And
We agree.
You're right that Waymo is not going to make money and Tesla's not going to make money. They don't have to, because that's right. The investors don't expect them to. We do expect Uber to actually be profitable. And I loser.
Hugely
They just
profitable
are
now,
going to have to spend
Stephanie.
an enormous amount of money on AV. They're going to have to spend an enormous amount of money while Waymo and Tesla are collecting data, while they're using AI infrastructure to better their products as well. I'm not saying Uber's not going to do the same, but they have to spend a lot more money, in my mind, to catch up. And by the way, stock's also up 40% on the year. I just think it takes a pause.
Yeah, it has taken a pause, and you're exactly right, but I'm making a different point. They are not going to build a fleet of millions of autonomous vehicles. That's not the
I'm not
strategy.
saying they will.
Okay, so what's the money that they're doing a $20 billion stock buyback. What's the money that you see them spending? What they're actually doing is partnering with the other 500 companies all over the planet who are doing AVs. Uber's not building a fleet of Jaguars with cameras on the roof.
They're not going after volume, but they're still spending a lot of money, and they're going to continue to spend a lot of money. I mean, $300 million just for Neuro and Lucid, and they have to spend all that with those two brands just to actually get any kind make any kind of progress in that particular part of the segment of the market. My mind is, look, this company is a great company. I like it for the reasons that you've said. I think the total addressable markets are huge, but I don't think this stock works if they don't make money. If they miss another EBITDA number next quarter, the stock is going a lot lower.
All right. Steph, thank you for joining us. Appreciate you filling in.
So I don't know. Where does everybody think about Uber? I actually think it's pretty interesting here. It's down around what's it down around? 20% or so. Gone from 102 to 84, 15%. I mean, it's interesting. I don't think it's got the power that, whoa. Josh Brown bought an energy company, everybody. I don't know what the hell's going on here. He bought ExxonMobil. We'll get to that in a sec. Let's close out Uber. So I'm interested in Uber if it goes lower. I'm not interested here. I do think it's going to take a breather the way that Josh said. It is still up 40% for the year. So this is definitely going on my watch list. Uber is on the watch list. as of the end of this video when I type it in. It's going in. So I'm actually very interested because I think, look, energy is going to get a bump next year, I think. We're in a position where we're constrained. We need more grid. We need more oil. We need more natural gas. If you look at the natural gas market, we need more supply to bring the price down. And we just simply need more for data centers. And you're going to get paid a big dividend. And I think they're trading at a very low valuation. And I'm interested to see what he says about, oh, we got another one about Oracle plunging on weak revenue. Interesting. Very interesting. And then Lehmanthal bought Adobe. Jesus Christ. All right. So the one company that I think is really at a disadvantage is Adobe, only because I've been using Gemini Nano Banana for my thumbnails. Stupid reason why. But I mean, if this is the worst that AI is ever going to be, and you can do this amount of stuff with AI, what the hell are we going to be able to do in the future? So I think Adobe is, I don't know. That's not something that's that interesting to me, but energy is. Energy is very interesting. We need more of it. So let's see what they have to say about this. So I guess this is the end of Lehmanthal buying Adobe and then Brown buying Exxon. And I have the numbers for Exxon. I actually just wrote an article on Chevron, so I'll show the numbers in a minute.
Trade alert, and it is from Josh Brown. Maybe you're surprised by it. I'm not sure. ExxonMobil?
Yeah, so I have a long-term position in IEO, which are the American natural gas and oil producers. The problem with that ETF, not problem, the thing about that ETF, it's very Phillips, COP, and that's okay. It's a great stock. But Exxon is breaking out right now. We talked about this 2 weeks ago or 3 weeks ago on the show. It was the column that we wrote up for CNBC Pro as best stock in the market. It's now following through. This is exactly the level that I wrote about. As she gets toward this level, you would way rather be long than on the sidelines or, God forbid, short. This is a stock that has not performed in a long time. Give me a longer-term chart than 60 minutes, if you guys don't mind. Thank you. You can see here, third time's a charm. This 120 level has been overhead resistance. I think the sellers are cleaned up. I think there's really no reason for this stock not to be able to break out right here. So I am long personally, not a huge position, not buying it forever, buying it for a trade, but I think it's going to work.
Okay, I'm going to come.
All right, before we see the rest of that, I want to show everybody the numbers behind it. So this is from the article that I wrote the other day about Chevron. So I actually don't remember where the spreadsheet is, so I'm just doing it right from my article. Exxon is trading at 8 times EBITDA and 10 times operating cash. That's really inexpensive. I like both Exxon and Chevron here. I like Chevron a little more because it has a little bit larger dividend and there's a little bit more growth. So when we look at the forward growth for Chevron, 36% over the next 2 years on EPS. Exxon, though, has, once again, my rant about Costco. All right? All right, everybody, here we go. And I'm going to be on the market close at some point today discussing Costco with Amit and I think Sam. Now, here you go for a preview. Before the numbers change today, Costco is trading at 36 times forward earnings. 21% EPS growth over the next 2 years. So if we want to stop using Nvidia, that Nvidia is inexpensive compared to Costco, how about Exxon and Chevron? How about Exxon is trading at 17 times earnings for this year, and Costco's trading at 44 times? How about Exxon's trading at 13.5 times forward when Costco's doing 36? With more EPS growth, it does not make any sense. It doesn't make any sense. And here's why. You look at the cash from operations, you look at the flow. Exxon's doing $51 billion in cash from operations when Costco's doing $13.5 billion, and free cash flow Exxon's doing almost 24 billion. Costco can't even break 10 billion. Costco's valuation is stupid. And in a recession, we're still going to need a tremendous amount of energy. Chevron and Exxon will be fine. Costco has a 2.97% margin for profit. I got to tell you, there is nothing about Costco that I like other than shopping there from an investment standpoint. Nothing. And if Amazon gets into the game with big box, discount big box value, forget it. Going to Costco for most people is probably, 30-minute drive, 30 minutes back home, 10 minutes to find a parking spot, 10 minutes to walk into Costco. I mean, come on. It's dumb. Dumb. So everybody is saying that Alphabet is tanking. Why? What happened with Alphabet? I mean, 3.5%. This is probably AI bear bullshit. Oh, here we go. We found it. Seeking alpha for the win. I don't know if this is exactly why, but seeking alpha for the win. Disney alleges Google's AI systems infringe on its intellectual property in a cease and desist notice. So, who knows? This is hearsay at the moment, but interesting nonetheless. I don't know if it deserves to be down that much. I think it's more about just how much it ran up and what the fears are because of what Oracle put out last night. So I'm not too worried about that at all. I think this is more AI bears trying to control the narrative. They're not going to win. They're just not going to win at all. Yeah, Nvidia getting smashed is unfair. I agree with you. I mean, look, that's investing. You got to be ready for things to go down. Ooh, while we've been talking, OpenAI news. All right, we got to see this. I'm excited. I'm excited about this.
Breaking news on the ChatGPT front. Let's get straight to Mackenzie Sigalos with the details. Mac?
Hey, Kelly. So OpenAI has just unveiled GPT 5.2, which it's billing as its most advanced frontier model yet for everyday professional use. Better at things like long, multi-step tasks such as coding, spreadsheets, document analysis, with far fewer hallucinations, according to the engineers who built it. Now, it's rolling out both in the consumer chatbot and via the API for enterprise customers. It also lands, as you said, on the same day as a new billion-dollar investment and Sora content deal with Disney. Fiji Simo, one of OpenAI's high-profile hires out of Meta, told a small group of us a short time ago that this recently declared code red is actually a normal part of the company's playbook, essentially marshaling resources around one key priority. Simo said that this release has been months in the making. But I will say this, Kelly, under the hood, Code Red, this new phase of the company, looks more like incremental tune-ups than moonshot bets. GPT 5.2 is a faster, smarter update, but it's not GPT-6, and it's not the kind of step change that we saw with Google's Gemini 3. It's also not immediately obvious how $1 billion and a couple hundred Disney characters in Sora really change that core model race that it is fighting against Google. But Altman actually made the case on our air this morning that the real bet here is on owning more of the stack, including an in-house AI chip that he says should drive down the cost per token. That's currently our best proxy for what it costs to run these models. Kelly?
What else would you add, Mackenzie? I just logged on to see if I can use 5.2, and I don't see it yet. I also noted that I thought...
I just checked also. It's not on. So it's still on 5.1. I have a subscription to all of them just so I can play with them to keep up with everything. And it's still on 5.1, everyone.
Sam's energy, maybe I'm reading too much into this, but was a little flat in his interview earlier today.
I mean, these are the two big announcements that they've made since declaring this code red last Monday in that internal memo. And we're seeing a $1 billion equity investment, which is a drop in the bucket compared to the $1.4 trillion worth of compute commitments that Sam Altman made. And then we're seeing an incremental update to the model. Now, they say that this does still beat Gemini 3 on some of those key benchmarking tests, especially where agentic AI capabilities are concerned. But people are looking for something bigger. This is their 10-year anniversary today, and they've certainly come a long way since those roots as a scrappy research lab. But I think that people are looking for more on the product front. And what I will say with Sora is that this is still a gated experience. It is very expensive to run, something that Sam Altman was asked about on our air this morning. And he made the point that it's a freemium model. People will pay for the kind of video generation that this new partnership will lead to. But keep in mind, Kelly, this is not an exclusive deal. Bob Iger teased at the fact that only one of the 3-year commitment that this IP content deal entails will actually be exclusive to OpenAI. So there's a question as to whether other players like Google might ultimately strike a deal with them. Yes, they're at the cease and desist phase right now, but that could lend itself to a formal partnership.
All right. So here's where I'm at on OpenAI. And I have a long-term opinion on this. All right. My long-term bear case, and you did not hear me stutter, bear case for OpenAI is that Alphabet says, hey, Altman, hold my beer, check this out. And they make Gemini Pro version free for everyone. Meta free for everyone. Two of them, the last thing that they want is OpenAI starting to sell advertising and start taking market share. So I could completely see Zuckerberg and Sundar sitting down, have a coffee somewhere, one of their houses, say, listen, we're in adjacent areas. You guys do search, we do Instagram, social media. Let's put it all out there for free. If Alphabet puts it out there for free the way that Meta's AI stuff is, okay, OpenAI is going to be screwed because that's the only way they really generate revenue. And the best part is they have their ad platforms already built in. It's already done. Alphabet doesn't need to charge for Gemini. And if they make the best version available for free, and you don't have to pay a subscription, and if it's just as good as ChatGPT or better, ChatGPT is going to be swimming uphill and it ain't going to be good because they already have a built-in ecosystem for advertising to generate revenue. They don't need another revenue generator. While it would be great to really stick it to OpenAI, I can completely see them doing it, and that would be a game changer. So I don't know. We'll see. This is going to be a race to the bottom. This is going to be a situation where these companies are jockeying for the same users. And if you have one that's free and others you have to pay for, and they're just as good, people are going to pick the free version. And keep in mind, the two largest advertising platforms are through Alphabet and Meta. Google search, and then Instagram/Facebook, and then you have YouTube. They own most of advertising because it's the best bang for the buck. And if you just, all you have to do is open up Alphabet's Google AdSense and it'll click something where it also goes into Gemini and you can advertise on that and then make Gemini free. Why not? Why not? I feel like Alphabet already won the game when it comes to this. OpenAI just gave us a new vertical to look at, but Alphabet's going to ultimately freaking. Hold on. Somebody's saying I just quoted CRM CEO. Is that why? Is that what Benioff said? I have no idea. Yeah, I mean, look, I agree with it. At some point, you're going to use whatever is just the lowest cost, and Alphabet's in a position where they can make it free. I mean, it's what happened with search. Think about it. In the beginning of search, you actually had to pay for the Netscape browser until Microsoft acquired it. I mean, just saying, it's going to be a race to the bottom. I really think it's going to be a race to the bottom. So we'll see. Where's Oracle right now, everyone? Let's see. Nvidia is still down under 180. This is freaking wonderful, isn't it? Nvidia is still down on the day. Crazy. Crazy, crazy. Let's see where Oracle is. It's trying to fight its way back a little bit, but I don't think you're going to, I don't think it's enough. I don't think it's enough. I think that freaking Oracle is in dead man's land for a little bit, and I would not be surprised if it keeps going further. I mean, this is really what I was afraid of with AI bears. We're going to fight the bears. Don't worry. We're going to freaking fight the bears. No candlesticks for me. I'm just looking at this, just paying attention to what's going on. Down almost 28 a share. And the problem is that how big of a company Oracle got, this is impacting a lot of index funds. So we'll see. Look, I want to see Oracle go lower to establish a position, but I don't like it here. I like Nvidia a lot. Nvidia is it's the best company in the market. I'm not playing around with this. Oracle needs to issue a lot more debt. And look at this, ladies and gentlemen. A little company called QXO popping off above 22. QXO. Remember where you heard QXO first. Thing of beauty right here. Wonder if there's any news out on QXO. I should really look at their press releases every day. I don't. I just don't have the time. No news. It's just moving higher. My price target on Nvidia, I hate giving price targets, okay? But let's look at Nvidia just from a realistic perspective, okay? If we look at Nvidia from a valuation perspective, here's where I see Nvidia. Gotta get the right spreadsheet out. This is why having a lot of spreadsheets open is difficult. And believe it or not, I need another monitor, even though I have a 49-incher in front of me. So Nvidia is at 179. They're expected to do $9.51 in 2027. They're currently trading at 18 times forward earnings. And the reason why Oracle is not down more than it is right now is because it's fallen so much that it's actually trading at a very low forward multiple. It's just the balance sheet and cash flow statements suck. It is what it is. Now, if we put Nvidia 225, does that even look scary? Trading at 23.66 times forward earnings. I mean, it's still cheaper than Amazon and Alphabet at that point. So what happens if we go 250? At 250, it is still cheaper than Apple, 26 times. Now, here's the thing. That's assuming these numbers don't get taken up. And they very well could get taken up. I can see Nvidia going, in all seriousness. I'm not saying it's going to happen, so do not quote me on this, all right? I would not be surprised if Nvidia hits 250 to 275 by the end of next year, all right? Here's why. We're going to do simple math. We're going to go back to Seeking Alpha. We're going to look at the forward estimates. We're going to do simple math. So next year, if Nvidia does 316 billion in revenue, basically 50% year-over-year growth, and at a 50% profit margin, basically 160 billion in profit. So when you look at that, 160 billion in profit, what does that work out to? Oh, over 3 billion a week in net income. 3 billion a week. We've never seen this before, ever. And then in 2027, if they get to over 400 billion, check this out. 52 weeks in a year. Okay? 52 weeks in a year. At a 50% profit margin, which is less than what their margin is right now, you'll be at $200 billion in net income. You're at roughly 3.9 billion a week in net income in 2 years from now. What are they going to freaking do? With 4 billion a week, they can invest in a lot of companies. They can buy back a lot of shares. They can do a lot of things. So to me, Nvidia is one of the freaking most interesting companies. I do not think that we are slowing down on the Nvidia GPU craze. I think that the runway is going to last several years, and I won't be surprised if it hits 250, 275 next year. And it's going to be very interesting to see what they do with their profitability. I mean, this is a company that the majority of analysts are only expecting to grow. So I think it is very undervalued here. I think people are worried about a boom bust cycle. They're worried about being cyclical. I don't believe that's going to happen anytime soon. Keep in mind, we're just opening up China HB200s. You got Rubin dropping next year. So next year is in 2.5 weeks. So let's think about this. You have Rubin dropping. All the companies are going to want to buy it. You have the floodgates are going to open up from China for the Blackwell HB200s. So these numbers that we just looked at may not even incorporate those movements from China. And if that's true, Nvidia is dirt cheap. It's getting hit today because of Oracle. The two should not be connected. This is sentiment. Nvidia just got above 180, everybody. It's 181, 180.05, 180.03. Nvidia is over 180. I think it's going to come back. It should come back. Meta turned green. Microsoft is green. SoFi is green. I like it, everyone. But yeah, in all seriousness, Nvidia it's the company. I wonder what Broadcom is going to do this afternoon. We'll see it with a met. But as far as Nvidia, LFG Nvidia, I'm with you. I own a bunch. We'll see what happens. Yeah, couldn't BMNR, but can we really complain about BMNR? I mean, we were at 25 2 weeks ago. We're 39. Can we really freaking complain about it? Space is pumping also trails. I mean, Matt Money tried getting Matt Money was able to gift all those memberships because of Rocket Money. I should have listened to him. I didn't, but you know, it is what it is. I don't have an opinion on MicroStrategy/strategy. I don't have an opinion on it. I like Ethereum. We'll see what happens. Thank you. Rivera is one of my favorite players. Appreciate it. Well, let's see. I mean, listen, Nvidia should be 1,000 every second of every day. I mean, oh my God. I don't know if I can get to 1,000, but it should be higher. I'll tell you that. It should be higher. Wow, June, you bought all the Rocket Lab tips? That's awesome. Congrats. You did too, Chels? Jeez. You got a pair of winners right there. I was too scared to buy Rocket Lab. I couldn't see it. But whatever. I can't get everything right. Never claimed to get everything right. %20 of the portfolio. So normally most people react crazy to that. I'm not going to, because I'm going to assume it grew to 20% of your portfolio. June, the question that I would ask is, out of the capital that you've allocated in your portfolio, what percentage is the capital allocated toward Rocket Lab? Because with the amount that it's gone up, I'd be willing to bet it's around 5% or so. Mad Money, you're still here? Look at you. Maddie Money. Great role model to society. Maddie and I are going to try to do something on the weekend. So we'll see what happens. Listen, I know you guys are all asking about VG. I got to tell you, I haven't done the due diligence that I need to. I know a lot about it. I'm not up on everything that's going on. The premise is great. I just, at the moment, I'm not going to go down that road. I may start looking at it soon, though. We're all following Matt to the Lamborghini dealership. Okay. All right. I sent Matt a picture of something last night, so we may be going to a different dealership. Oh, you know what? I don't know what cigar Matt ended up buying the other night. I did send him a picture of some Opus One Perfections. Oh, boy. All right, everyone. All right. Got a treat for everyone. Don't go anywhere. We got a treat. Somebody else may be taking off from work. Just saying. Just saying. Somebody may have a little bit of time on their hands. They said give them a minute. We'll let you know who it is in a minute. Thanks about the thumbnails. Yeah, I mean, in all seriousness, the thumbnails are just freaking Gemini. That's it. That's it. Fresh milk delivered. Love it. No, don't say that, random. Unless it's true. Where are the cookies? Listen, it's 1:48. I know it's never too early, but I got to get a lot of stuff done today. I'm trying to bang out 2 articles. Halfway done with one of them. I think I want to start doing an article on SMH later. So, and then Amit and I have our stream tonight. I should make, you know what? Maybe we'll make the thumbnail live for Amit and I. See what Gemini comes up with. Let's see. All right, give me 1 sec, everyone. Why are there no photos in that? What the hell? Here we go. All right. Our guest is not on yet. All right. Am I not on Gemini 3 Pro? What's going on? Hold on. I totally screwed this up. Everybody, just give me 1 sec. Let me start a new thing on Gemini. Hold on. All right. I'm going to show you how crazy freaking Gemini is. You ready? And always be nice to Gemini. Please create a thumbnail for a YouTube finance show. And of course, my spelling sucks because I have a microphone in front of me and it's just awkward. With these two people, have it have a stock market theme discussing what happens in the stock market today. Boom. Why is it not going? I don't know why it's not doing anything. Jesus Christ. Gemini, you're not doing what you're supposed to do right now. I don't know what the hell's going on. 1 sec. Does it do that sometimes? Refresh. All right. All right. Hold on. All right, let's see what it comes up with, everyone. Not bad. I mean, think about it. That's really not horrible. And think about how quick that was. Give me a few more options. Like, Nano Banana is freaking ridiculous. Steven admits hosting glasses of milk and suits. That's awesome. That would be freaking hilarious. But in all seriousness, if this is the worst that AI is going to be, I mean, you got to think that you're going to be able to upload anything in it and just tell it to do whatever you want. I mean, all right, that's not exactly a good, those aren't exactly good images of Emit right there, just saying. Looks nothing like them. Looks nothing like them there. But the one on the bottom's not bad at all. Yeah, I mean, listen, these aren't, this isn't horrible. For however long would that take? 10, 15 seconds? That's not bad. So obviously I can put in to change this and whatnot and say incorporate like Nvidia and Oracle and the Fed. I mean, let's download this and check this out. I have an idea. I will say it's weird that it takes so long to download from freaking Gemini. You guys are hilarious. All right, so we liked this one, or I liked this one. So I love it. Please incorporate Nvidia, Oracle, Broadcom. I should probably write Broadcom out. Probably write the names of the companies out, right? And the Fed. See what it comes up with. Costco, that's right. How can I forget Costco? Oh my God. I should tell it to have us walking through a freaking Costco store drinking milk. That would be freaking hilarious. Now I don't know where the guest is. Say give him a minute. It was at 1:48. It's more than a minute, sir. Not what I would have thought. Add Costco and give me another version. But yeah, I mean, if you play with it, I mean, it's pretty ridiculous what Nano Banana can do. I mean, I like the ones from last night better. I actually like the original one without the logos. But once again, Nano Banana is pretty freaking good. I think that you get a lot of value out of it for $20 a month. And we'll see. We will see what happens. Thank you so much for the super chat. I love it. Thank you. Really appreciate the support. Please tell me you're into raw milk. Look, I get my milk from Ronnie Brook Farms. Okay. Have Sir Joseph Carlson looking down on you in Costco. That'd be hilarious. We do need a new photo of Amit. I'll ask him to email me one. Let me text the special guest, see if he's coming. Ooh, S&P went green? Really? Interesting. I mean, Amit, yes, he cut his hair, I believe. Oh, we got a response. All right, so we got two surprises. First one is who's coming on. Second one is coming soon. All right, Nano Banana is ridiculous, everyone. Freaking Nano Banana. Craziness. What you're going to be able to do with freaking AI is going to be nuts. Absolutely nuts. I'm going to freaking text this to freaking Amit and make him crack up. Yeah, I know. They did something wrong with his head. I know. Hilarious. Thank you for the super chat. Amit is transforming into Borat. Hilarious. No. No. Don't even tell me Bellinger just went to the Mets. Don't do that. No. Oh my God, this is no good. That's a little annoying. That's a little freaking annoying. Everybody knows I'm a diehard Yankees fan, so God, that really is going to suck if Bellinger goes to the fucking Mets. Unbelievable. Unbelievable. It's not a joke, everyone. He really could be going to the Mets. So crazy. Sports Illustrated on MSN. Yankees prime to lose Cody Bellinger to blood rival Mets. There he is.
Steven.
Dude, smoking a cigar, driving through Texas. Look at you.
It's living the dream, Steven. Try to be like you every day.
Welcome, Matty Money, to the stream. What, you don't work for the day?
No, just I've been at my desk and listening to you. I am working from home today. I woke up late. But I decided to go get a little Chick-fil-A, Steven. So
Okay.
How are
little
things?
Chick-fil-A. Okay.
Are things well?
Oracle's down. Oracle's dragging Nvidia down, which is not okay, my opinion.
Short term stuff, Steven.
Short-term stuff. What type of cigar? The chat waffling on right there.
This is a Drew Estate Undercrown. Not a bad cigar. I think it's like the M&M version. He like collaborated with them.
Interesting. I need 1 sec. Hold on. I'll be back in a sec, everybody. Matt, keep everybody happy, please.
Oh, I'm in trouble now. I'm not like actively driving. I am technically, but I'm just being really slow. I don't want to be on the phone, streaming, driving, smoking a cigar. It's not safe, so I'm parking. Let me put on my flashers. How's everybody doing? I know a lot of people are concerned about Venture Global. And it just goes to show, I think Tanner said something beautiful the other day. He said something like you can't borrow conviction. And so it's just one of those things. If you just don't do your research, you just blindly follow somebody into a company, you're going to get scared. Like, I'm excited. I bought, I know somebody else bought. They fired me up. They inspired me. So I bought another 3,000 shares this morning. It's like $18,000 worth. I think it's a good opportunity for me. I mean, it really just depends on what people are into. But once again, in order to feel justified in purchase, you kind of need to know what's going on. You need to know the future. You need to know all these things. And unfortunately, if you just blindly follow somebody in to a company and you don't know the backstory, you don't know the future of it, and of course, people could always be wrong on those trajectories. But honestly, Steven,
I'm always wrong.
This is what I try to tell people. Ooh, my buddy used to have one of these gray Tundras. Those are nice. So they're sexy.
I got to cut you off for a sec.
No, might as well just Just kidding.
Because the chat asked for something. And I don't know if this is any better, but a fake Amin, a fake Steve drinking milk at Costco. I mean, I don't think that really looks like a Mitt. So ChatGPT's got to do some work on that.
I think it's pretty good. Dude, Gemini always hooks you up, although you look like you have gargantuan hands.
Well, this one's ChatGPT because the chat wanted to see what it looks like on ChatGPT.
I think you should keep it. Let me move this sideways.
But
I think you should keep it, Steven.
So, Maddie, what are you doing with the rest of the day? Look at you. You're enjoying a midday cigar. You going back to work soon? What's going on?
I'm gonna get some grilled nuggies. Nice little drive. It's like a mile and a half. Nice little drive. Got my Henley shirt on, living the dream, just hanging out. And I was like, you know what? I was like, I'm not just gonna let Stevie go at it alone midday. I know you took the day off, but I'm gonna go get some grilled nuggies, some buffalo sauce, probably. I don't know. I gotta look at the. I had the only thing I've had today so far is a Lindor truffle, and it was really delicious. It was tasty.
Wait,
And
whoa. How do you start your day off with a Lindor truffle?
I got a sweet tooth, Steven. I don't know what to tell you.
I
I'm
mean,
not
I
like
started
you.
my day off with oatmeal and I put a banana and blueberries in it.
It's why you're a model to society, Steven. This is why, I got where I'm at, and you know me, I got lazy. I don't write articles anymore. I don't make videos anymore.
Listen, I mean, just because, listen, if I had your money, I'd donate mine. All right. But I don't think that gives you the right to, not make content and not do articles. I think you should do both.
I'm running more streams than you are, Steven. I'm 24/7.
Okay. Let's
Just joking.
hold on there.
But
Freaking
no, that's
Maddie.
what's that?
Freaking Maddie.
Maddie's 24/7, Steven. But no, hopefully that'll be a good opportunity in the long term. We already got like 160, 170 people sub to it, so it'll be good. But no, you were gonna say something. I like the Costco thumbnail. You need to keep that.
So the people want to know if you're going to Dutch Bros today.
I thought about it actually.
Did you really? Okay.
I thought about it's midday. I see these vloggers on YouTube and stuff, and they'll go to like these there's this new place I guess in Austin called Summer Moon, and I was watching this one guy. He went to Summer Moon, and they have like moon milk or something, which I guess is like, I don't know if it's cream or if it's actually like sugar milk or what, but it looked really good. I don't get any of that, Steven. Like I just get like an Americano, or I get like a 911 from Dutch Bros, which ends up being, I think it's like 4 or 5 shots of espresso and a coffee. That's tasty. I like the 911.
Dude,
And
you're going crazy.
And then I like Americanos. Americanos is just, what is it? Americanos is 2 espressos, right? And a water.
Yes. All right, we gotta switch gears for a moment, everybody. I'm sorry, but Oracle's trying to make a comeback, ladies and gentlemen. We're trying to get to 200. 197. It was as low as 190. It looks like it's not going to get taken down to where I thought. It's trying.
Steven, you're trying. This cigar
is trying to make a comeback here. If this was not copyrighted, we'd be playing Roy Jones Jr. Y'all must have forgot. That's what Larry Ellison's saying right now.
Wow, Steve, what I've realized?
It's trying.
You're a Dominican cigar kind of guy.
This is trying right here. I got to tell you, if it goes over 200, I'll be thoroughly impressed.
Are you buying, Steven? How much did you buy?
Not at these levels. This is nosebleed territory compared to Nvidia, man.
Good thought. So I might have missed what you said, but sorry if I'm changing topics on you. I'm going from technology to energy, but I know you like Exxon, but you're obviously favoring Chevron here. What particularly, and why don't you like any of the European companies?
Okay, so one, I'm a shareholder of Exxon. I'm not currently a shareholder of Chevron.
Oh, I thought you were. I thought you bought in Chevron.
I'm going to be buying it soon. I think they're both incredibly run companies. I think there's more value in Chevron than Exxon to unlock to the upside. They're both incredible. I think they're both going higher. Chevron has a little bit more EPS growth, and they pay a bigger dividend, and they're doing more buybacks, I believe. So I am just on the team of Mike Wirth, That's nothing against Exxon. I'm right here. I'm a shareholder. But if I had to pick one or the other right now to invest for the next couple of years, I would be buying Chevron over Exxon.
And I'm curious if you do a lot of looking at the European companies, because like
No.
Total and Shell aren't horrible right now.
No, I don't. I was looking at Conoco. Conoco's numbers surprised me, actually. I didn't think they were going to be that good.
Is it because they're ADRs? Is that why you don't like the European companies, or is it
No,
what?
I own one of them. I'm just not looking at an ADR. I think the American energy trade is where I want to be because of all the data centers. That's why I'm sticking with the Chevrons and Exxons.
Well,
I
mean,
they got
Chevron makes a lot of money from
all the drilling. So
Chevron makes a lot of their money from Kazakhstan. Steven, did you even know that?
I know they're an American company, though.
So I'm
Big
confused.
footprint in the Permian.
I'm confused. I'm trying to understand your logic. I'm not trying to be mean or I'm trying to understand your logic. When you're buying American, is this because it's an American-run company, so you feel more confident in it, or is
No,
it because
because
you
they
think
have
that the
more
majority of the volume comes from America?
No, because they have a lot more exposure to American assets. And
Okay.
I think that we're going to have the largest increase in demand of energy outside of third world countries increasing their standard of living and adding dishwashers, microwaves, and all that stuff. I just think the American data center boom is not going to stop. And I want companies with a lot of exposure to the Marcellus, to the Bakken, and to the Permian.
I don't know. To be very honest, I don't know Chevron and Exxon's exposure to Marcellus.
I think it's some, not tremendous, but I think that
I know Chevron's huge in the Bakken. You told me that yesterday. It's
the
more than I
Hess
was
deal
expecting.
increased the Bakken, and they have so much takeaway from Permian that I just like them.
I mean, combined, Exxon and Chevron is probably close to 2 million barrels. They're probably 1/3 of all the production from the Permian. Not all that's oil, right? But
Yeah,
2 million barrels of oil equivalent a day.
but
which is the
you got to
majority.
drill for oil to get natural gas out. So
And then yeah, you surprised me yesterday with the numbers from Chevron in the Bakken, 200,000 barrels of oil equivalent. That's pretty big, and that's
it's
not as
huge.
gassy as the Permian. Like that, when you're talking about 200,000 barrels of oil equivalent, that's probably like 87 to 90% oil. I might be surprised on that, but I feel like it's a little waxier, a little heavier oil than you got in the Permian. So
I want to watch something with you.
you want to watch something with me?
I want to watch something with you. Do you mind?
I want to watch something with you, Steven.
All right. This is applicable to this afternoon. Let's see what our friends at CNBC have to say.
Analysts do expect the chipmaker to beat and raise. Honestly, everyone is incredibly bullish on this company, and that's because of surging demand, specifically for custom chips it makes for Google. That momentum helps explain why Broadcom, you said shares are down today, but if you look at it over just a 2-month period, shares have jumped 25%, while Nvidia essentially flatline. You can see down negative 2%. But these particular chips, they're called TPUs or tensor processing units, and they're designed specifically for AI workloads. They're gaining traction, though, beyond Google's Gemini models that you just talked about. Meta, Apple, Anthropic are all now using the technology. The Street expects about a 56% increase in AI revenue growth for Broadcom in fiscal 2027. Why? Driven by expanding TPU reach, that chips that we were just talking about, as well as AI networking demand. So that's, think of them like switching chips, these connect servers inside a data center so that they can speak to each other. That's a very important element of these build outs too. We often talk about the chips, but we don't talk about all the other parts that go in there. The custom chip momentum, though, is also getting a boost from shifting industry dynamics. And what do I mean by that? Oracle just last night, they talked about selling their Ampere chip stake in their earnings call, with Larry Ellison saying the company is now committed to, quote, chip neutrality and would deploy whatever chips customers want. That means that it can open more doors for Broadcom's custom silicon business, which, by the way, is also, in direct partnership with OpenAI. We heard Sam Altman talk about making chips in the near term. Morgan Stanley sees the real inflection, though, for Broadcom coming in the second half of 2026, when Broadcom is expected to deliver $10 billion worth of racks to what's believed to be Anthropic, the maker of Claude, the large language model I use. But some of that Google chip strength may be cannibalizing Broadcom's other custom chip customers. 4 out of 5 Broadcom ASIC clients, these are the custom chip clients, have ties to TPUs at Google, suggesting this growth would be replacing, not necessarily adding to other expectations. So the results should help clarify whether Broadcom is capturing genuinely new business or simply redistributing revenue across its existing customer base, Kelly.
You're a Claude girl?
Yeah. And
Really?
I always say Claude because I'm from Quebec, but yes, of course. It's the best writer.
Claude. I haven't used it in months. And it's free?
I know I pay $20 a month.
All right. See, it's hard to trial. It gets sticky after a while. I guess that's the product argument. Christina,
you got to change it up, get some spice in your life.
I agree. If it were free, if it were free, but I guess you can $20 over here and then $20 over here just to try them all, just so I can say how many calories was in my lunch today.
I know. I still can't believe you do that. You check that, but good on you.
I need to do more of it. Christina.
That's what I do, Steven.
Listen,
I use it
I
for
gotta tell you, I may have to try Claude.
If you're programming a lot, it's really useful, and I know maybe you do a lot of coding. I don't know how much coding you do.
0.
I'm gonna try something I might use Claude for the channel. Basically, and I'm curious about hear people in the chat have to say. But basically, I'm gonna start off, I don't know how much, but a couple $100s, and then hopefully every hour that the market is open, I'm gonna allow people to buy or sell $1 worth of stock. And hopefully I can automate it so that way, there's going to be like a 10 or 15 minute window before it closes. And then once it closes at I don't know, I'll probably do it at 9:45, 10:45, etc. And then 15 minutes before the close. So I don't know, 6 or 7 purchases a day. But the hope is we could see where the chat puts the money where their mouth is and see how it does.
All right, Maddie, you know what? You're working on a lot of things. I like it, Matt. I like it. So what are the insights? What are we looking at now?
I was telling the chat when you went to, I don't know, you went to the bathroom or got a cup of coffee or what, but I bought more VG today.
All right. I'm not going to ask you about it, but all right.
Why not?
Cool. Because I don't want to go down that road with you, just in case.
No, okay. That makes sense.
Gotta drink more water, everyone. That's what I need to do.
You need to drink more water, is that what you said?
Yeah, I need more water in my life.
Me too, man. I was just thinking about that. I was just like, my body survives off of coffee, diet soda, and I need to drink more water. But I haven't died yet, so maybe I don't need water. Well, it's almost the 15th, Steven, so that'll be more Palantir, more Rocket Lab, more Venture Global. I want you to look at another one that I told you about, Northern Oil and Gas, NOG. Curious to your thoughts on that one. They just actually, I forget what company, but some company sold out of the Utica. I don't know how much you know about Utica Shale, but it's a little bit more liquids rich than the Marcellus, and there's some oil pockets in there. But NOG bought 49% of whatever this company sold. I forget what other company they partnered with, but basically it's a non-operated position, right? Northern Oil and Gas is non-operated generally. So yeah, they bought, and that was like a $500 million deal for NOG. So I'm curious how that's going to show up, because I think that's a new basin entry for them. They were NOG, I believe, was, anyway, I don't want to get into it, but if you want American focus, there's no international exposure on that company. And then Granite Ridge Resources is another one that I like, that I've been buying.
I think Ray is correct We need some milk. Yeah, I'll think, Maddie, you know what? Maybe.
There's a lot of good ones. I mean, I know you and I chat back and forth about Devon a good bit.
I do like Devon a lot.
But if you want, especially for your dividend portfolio, the NOG and Granite Ridge, GRNT, for your dividend portfolio, those will be good.
Well, you know what? Maybe on
They
our
do their
show on the
financials,
weekend, we'll
too.
go through them.
Yeah, that's true. We could do that on the weekend. Yeah, I like how they do their they make me think, because obviously people know I work oil and gas, and the big things that I don't think that we look at enough in the industry is recycle ratio and then reinvestment ratio, and that's obviously very important, right? They're very financial derived terms, but yeah, we can get into it.
We can get into it. So what time we head back to work?
I don't know. I guess as soon as I get this Chick-fil-A, and I'll probably get my Chick-fil-A and eat it while I'm working.
I like it. I mean, you're not at Chick-fil-A yet?
Well, I'm not driving. I don't want to drive, stream, and smoke a cigar.
Oh, I didn't know if you were driving. I have no idea.
Yeah. No, I don't want to drive, smoke a cigar, and stream at the same time. That's dangerous. Safety first, Stephen.
That would be smart. I wouldn't want you driving either, Matt.
Yeah, safety first. No, I got in the car, got on stream, and I slowly pulled out of my neighborhood and then parked on one of the main streets on the side. Just off to the side. Got the sun feeling on me, Stephen. It feels good.
Listen, I like it. All right.
Nice 81 degrees. Feels colder than that, but.
You say 81 degrees?
Yeah.
What the? I gotta get out of here. It's like fucking 30 outside.
I mean, 81's nice, and it's not humid, so got a nice breeze. Maybe that's why it doesn't feel so cold. It's a nice little breeze.
Maddie's just gloating right now, and wow, we got new news.
What do we got?
New news, ladies and gentlemen. Oracle, 198.95. It's trying to get back to 199. This is fucking crazy. This is crazy. I don't know, Matt. What do you think? Maddie disconnected, I think. I don't know where Maddie went. Maybe maybe somebody came after him. Who knows? He went dark, everybody. Maddie went dark. Yeah, I don't know where he is. I don't know. Nvidia's headed back up. That's great. Nvidia Oracle 199. Everyone, this is wild. We're getting a little bit of a reversal. Pretty happy about this. Getting a little bit of a reversal. Yeah, he lost connection. I'm not buying Meta here, so we'll see what happens. But everybody, thank you so much for hanging out with me on my day off. I will be on the market close with Amit at some point today. I will be live at 9:30 p.m. Eastern time with Amit. We're going to be discussing, are we in an AI bubble? That is what we're going to be discussing. And this is the thumbnail that I'm workshopping. I'm going to try to get it to fit into a YouTube thing, but that'll probably be what it looks like. So look for that later. Thank you, everybody, for joining. Thank you, Charles. Thank you, Ray. Thank you, June. Thank you, Michelle. Really appreciate everything. And before we go, let's just bring up Webull. Let's just give it a once more, see where we're going to end the stream at. So Oracle 198, Nvidia's over 180. Nvidia's coming back. Thank God it didn't keep retracing. This has got nothing to do with Nvidia. It should never have been down. So we'll see what happens. But thank you for joining. I will see everybody at 9:30 tonight. Bloodsport over Kickboxer. And if you're going to go over to Tanner's stream, do me a favor and please bombard him with code RED. Code RED. All right. Thank you, everybody. I'll see you at 9:30 p.m. tonight. Talk to everyone later.